down. It's time to get going here. It's April 12th, 2024. I would be Don Kaufman, and you are watching TheoTRADE Chat. Spoos this Friday morning are down some 41 handles. This is getting kind of fun. I said to everybody last week, earlier this week, get ready for the volatility, and here is some of that volatility. This is very different price action, though, than what we've seen even yesterday. There's just no question. This is duck and cover price action. If you've never seen it before, this is a little bit maybe to a prelude to war. There's obviously considerable geopolitical risks in play, and what you're seeing right now is a rotation towards the bond market. You're seeing heavy volatility starting to hit the market. Obviously, oil, but probably the single biggest and really scary move is the dollar. In the last 3 trading sessions, that, people, holy crap, is that going to export inflation? That is going to be serious. The implications of the dollar move, again, some of the biggest moves that we've seen in recent history to the upside, is legit like the last 3 days of trade in here. Nevertheless, coming into it this morning, you got 2 minutes to go to the cash open. The S&Ps are down. First and foremost, volume is not exactly magnificent. Like, it's getting it done, but it's not exactly huge by huge. So volume is decent in here. As I was saying moments ago, volatility is in an incredibly defensive posture this morning. You've actually got VIX basically to the highest levels. I mean, these are really the highest levels we've seen in quite some time. And, take into account this VIX, there's no real activity behind it yet, so things get a lot crazier in there and crazier in a hurry. So just be aware. Again, vol right now is unsettled. And then, as I was saying a moment ago, this is a rotation back into the bond market. It's not that heavy, but got to have a lot of respect. This is catastrophically large volume of the bonds. There's almost 200,000 contracts trading in just the ZB. Take a look at the ZN. You're doing clear over 1 million contracts in the pre-market. There's an incredibly defensive trade going on. Obviously, gold. Okay, I mean, you have to put in perspective. The dollar is exploding to the upside, and gold is up almost 2%. Oil's actually up. Dollar up is not good for commodities. No one gives a damn at this point. That's why it's an incredibly defensive posture. So let's come into the cash open. Worry less about equities at this point. You know that you're going to take a pretty good hit across the board. The positive area today is going to be none other than right here inside of the energy sector. The energy sector continues to rip, and this is a major break to the upside in energy. Let us come to today's cash open. Don't have too many chips on your shoulder about what you think is going to happen today. A lot of volatility. As I was saying, huge amount of volatility can actually play out on a day like this. So you kind of have like a quintessential all-down day. Now, you may see 15 products to the upside. Let me tell you, those 15 products are predominantly going to be oil-related. Other than maybe Netflix, there's nowhere to run to, nowhere to hide in the first couple of seconds of trade here. Ticks this morning, not nearly as horrendous as you may have expected. But again, looking down the list, some of the usual suspects this morning, again, in this advanced decline line, that's not good. It's not good. And again, the big bid this morning you've got that's outside of energy would be like Citi. It's earnings related. We have Citi, we have as well as Fargo. We have, JP Morgan and AMD taking a huge hit. Intel is probably also taking a huge hit. You can see JP Morgan, huge hit. Intel, by the way, and AMD, news related as well. Chinese chip manufacturing is, Chinese chip regulations are going to be not permissible for Intel or AMD. I would look for Citi to possibly pull back a little bit over here. And again, you can see me looking at this advanced decline line a bit. The reason I'm looking at the advanced decline line, with all due respect, is I want to see what else they could actually sell into this today. So obviously defensive stocks are bid. You're looking at Lockheed Martin, you're looking at General Dynamics. If you make bombs or oil, you're doing pretty well on today's trading session. Look, obviously over here is RTX. Everybody that's bid today is pretty much there's a reason for it, a specific reason for it. As I said, the posturing that you're seeing in the marketplace is unfortunately a little bit of prelude to possibly war, and that risk is being felt inside of the bond market and inside of volatility. So let's get down to the S&Ps. There's a little bit of a bid to the cash open here. I would anticipate that this is going to fade. I don't know how far it's going to fade, but okay, this is exactly where we closed up yesterday. I think yesterday we closed up 34 handles. Right now we're down 35 handles. So the last 24 hours of trade has been completely negated in the marketplace. You can see that there's a bid under the marketplace. Frankly, I wouldn't trust it as far as you can throw it this morning. I mean, maybe we bid back a little bit here, but again, I wouldn't read too much into it. To give you a little bit of a feel for where we are on the week, there is one aspect I think I have a lot of respect for it, is the expected move has not been hit. Neither the upper nor lower expected move has been hit. However, with that, I say time out. Wednesday into Thursday, we actually did trade down quite considerably within pennies of the lower edge of an expected move. Some traders count that. I happen to be in the camp that kind of does count that, but we did, in fact, in the early market hours here, trade down to what was 51.73 in the S&Ps, 51.73, which is exactly $40 lower. So if the SPX was $40 lower from where it presently is, all right? So here we have the SPX. If it was exactly $40 lower, that would be taking us close, very, very close to the lower edge of the expected move. You be the judge on that one. Nevertheless, anticipate that the S&Ps are going to roll back over here. When I say roll over, roll! That's what I just drew a second ago on the screen. What is the driving factor? By the way, if you're looking at the S&Ps right now and you're saying to yourself, why does he think that the S&Ps are going to roll over? Okay, because I think it's a good question. So the ticks are still negative, but they're getting better, right? Ticks are negative, but they're getting better. The advanced decline line is getting a little bit better. Like I can see that just by glancing down here. Look, Apple, they like me. Anyway, what really kind of you need to tune into on a day like this is right here. You look at vol futures, because vol futures, I'm sorry, they're at highs right now of the cash session. Cash session basically started right here. Volatility is going bid with the market going higher. That does not look good for the S&Ps, right? Who do you trust? You trust volatility, you trust the S&Ps. Everybody says, trust the price you see on the screen. You're exactly right. You should trust the price you see on the screen. I trust the price of volatility going up. Nobody buys volatility because we're going to rally. So it puts you in a precarious place where you assume at that point that we roll over. I think it's the higher probability assumption. Now, does it have to play that way? It does not. Okay, it does not always have to play that way. It's probability based. You look at it right now, you can probably say to yourself, yeah, there's probably like a 70-75% chance that we pull back at this point, and then the ticks will actually follow suit, which they are, so that we pull back. Now, I can't tell you how far we're going to drop over here, but I can tell you, with a certain degree that, on a probability, that we're going to drop. You go, well, how come you're not 100% sure? Because this is trading. And I couldn't tell you, Fed speak could happen right now. And Fed, the Fed is speaking right now. The Fed could speak and screw me completely. That's what the Fed is there for. So it's very important. Okay. Anyway, with that, we'll see how this plays in the next few minutes. There was one sector I wanted to also mention. So yesterday we rallied, but what really rallied yesterday? QQQ. This is yesterday's trade. I just want to show you it's a wild, wild bid back inside of the Nasdaq. Now, if you take a look at the Nasdaq on the week, the Nasdaq on the week almost hit the upper edge, almost, not quite there, okay, but they almost hit the upper edge of expected move. Bear with me here. Just 1 second as I anyway, the Nasdaq almost hits the upper edge of the expected move. Today, it actually drops precipitously by about 1%. So we're about unchanged in the Nasdaq. There could not be more contrast in this marketplace. We have huge, huge and critical divergences going on. What I mean, okay, by critical divergences, first of all, there's even divergences within sectors. Look at Apple is bid today. Google's got a little bit of a bid back under it, okay? But now you're seeing what, NVIDIA take a little bit of a hit? This thing was up huge the last 2 trading sessions. It's taking a little bit of a hit. This is going to be worth watching today because that could be the linchpin to put the nail in the coffin for the NASDAQ. But much more, okay, definitively and concerningly so, if you take a look at the financials, speaking of the financials, okay, many of those financials have earnings, okay, today. And take a look at the financials. They're smashed through the lower edge of the expected move. Again, smashed through the lower edge of their expected move. Be mindful of it because it is, okay, and has been the sector recently, okay, that has remained bid. It's completely broken down in the last 2 weeks of trade. So this has been the last leg of the move up in the S&Ps, okay, was all financials. I mean, just take a look. The QQQ, this is the NASDAQ. The NASDAQ, okay, went basically dead in the water weeks ago. I mean, the NASDAQ has not progressed really since right here, weeks ago. I mean, holy crap, we're in like mid-February talking about a dead NASDAQ. NASDAQ died out, okay? The last leg of the rally that you're looking at has been here in energy, okay? But more specifically, what carries much more weight than energy is the financials. And the financials have had this wild bid. They are breaking down, like full on breaking down at this point. I wouldn't be surprised to see a little bit of a bid back maybe today, and that's fine, okay? But nevertheless, this is a huge move over here. With that being said, the just taking a quick glance over here, the XLF, which has got a bid. Let's jump back to the S&Ps for a second, because again, I'm paying a lot of attention. By the way, ticks are actually positive right now on the day. You know, the breakdown that we're looking for came here. Now, you know, are we mandating higher? Check this out. If you think we're going higher, okay, the volatility is still extraordinarily consistent, and the volatility at this point, okay, is in stark contrast to what you're seeing in the S&Ps, meaning that the volatility is actually saying, no, we're not going higher, all right? And on a trading session like this, I pay a lot of attention to the volatility because the only people that really trade this contract, especially like the SIBO, the big volatility contract, look at this. That volatility just, it's actually breaking out to the upside. The only people that trade that vol contract, risk arbitrageurs, no. Okay, this is volatility arb. This is like traders that Peak Six, you know, Chicago Research and Trading, Citadel, like the smartest of the firms, the only ones that actually trade this contract. And I pay incredibly careful attention to it because when the market volatility starts picking up, and by the way, the last couple of weeks, oh, you don't pay attention to it. Why? Because nothing's going on. You rally, and then you rally some more. And then when you're done rallying, you think about it, and then you rally some more. But the volatility contract comes to life. And when volatility comes to life, and as soon as the marketplace starts bouncing around like this, which it clearly is, okay, I pay a lot of attention to it because all of a sudden, yeah, it's back, baby. And it is like the heartbeat of the marketplace. Like if there's going to be sell side activity, believe me, they're going to be buying volatility before that. I mean, you're going to see it instantly. They're going to buy volatility and smash the S&Ps. So the volatility at this point this morning is at highs. As I said to you guys, though, it doesn't, it doesn't always mean like risk is imminent. Okay. But it is a damn good indication from a probability point of view. Like you can't say like, just because this is at highs, this is definitely going to break down. No, but it doesn't help. When I mean it doesn't help, like because this is at highs, yeah, that puts you on notice for the S&Ps to possibly break down. And that's why this morning I see the bid back onto the marketplace. I see the Google starting to rally. I see the Apple starting to rally. Okay. Netflix doesn't count. It's a pile of crap. It's not a big enough market cap. Anyway, I see NVIDIA starting to take a little bit of heat this morning. Let's go look at NVIDIA, some of the order flow in here. I also see Microsoft down almost 1%. Okay. I see things. Ooh, this is interesting. There's actually quite a bit of put buying in here. Nothing crazy yet. Let's not get crazy, but it's nothing crazy yet. But there's definitely some put buying going on in NVIDIA, which, whoops, swing and a miss, could be indicative of some sell side coming on over here. Okay. Anyway, with that being said, this is a sit, wait, watch. Hey, listen, while I'm waiting and watching, I'm going to roll something. Rolling! Are you listening, Todd? making sure, Todd. Rolling! Okay, what I'm rolling right now is here in the VIX. 8-cent credit. I don't think I'm going to get it for an 8-cent credit. Ooh, it's at a 10-cent credit. Yeah, they're not going to give me a 10-cent credit. So I'm going to try to roll something right now for right around between a 5 and 6-cent credit. So this is a 13 lot of the 22 puts. And again, it's because I can see volatility higher, but I don't want to screw around. I actually do want to get this thing executed. Let's see if we can go. Let's do this. Okay. So I'm working. I'm not filling. I'm going to, in a minute, I'm going to cancel and replace this order and put it in at a 5-cent credit, and I'll leave it out there for the marketplace to, roll around on, get excited about. But you got a decent move up in VIX, and I think that rolling this today is permissible. So if you're not familiar with Tasty, I'm trading a lot on Tasty now. I mean, again, I opened up a ton more of accounts on Tasty, but I trade a lot more on Tasty now than I am on thinkorswim. But thinkorswim is still like, I still like the analytics over here. I was telling this to a group yesterday, the Inner Circle group. I rebuilt. If I look at my risk profile here, watch this. Look at the risk profile and just go portfolio beta weighted and go hide positions. I rebuilt the QQQ Spiders VIX. That's actually QQQ Spiders VIX. I rebuilt this position over in thinkorswim. You're like, why would you do that? Because it's a good idea. Because the analytics are better here, much better in thinkorswim. So I'm still using the analytics in thinkorswim as long as Charles Schwab doesn't chuck this up. But let's hope they don't chuck up the platform. Yes, I said chuck. Okay, I said Chuck. Charles Schwab. Come on. Used to be Ask Chuck. Okay. Ain't no Chuck. Chuck doesn't answer the damn phone anymore. Nobody answers the damn phone over there anymore. Okay. Not even for me. Build. He shoots. He scores. All right. So that means risk is a coming. They wouldn't have filled me over there for nothing. So I have now filled. What did I get? Oh, I got the 6-cent credit too. Okay. Isn't that special? All right. Continuing on over here. All right. So sorry about that. He retired. Vin, Charles Schwab is like 105 by now. Okay. Actually, I don't know how old he is, but he's up there. Okay. If you're over like 85, you could say 105. It doesn't make a difference at that point, right? So anyway, I rolled this. I rolled this, and I'm actually sitting with the other positions, contemplating my next move. We'll take that into account here. Let me look at this for a second. Come back over here. I got a catapult account. Catapult. Uh, this one's up 70%. And that one's actually losing 10%. But it's $100, and I'm only making like 70 bucks in here. Well, we'll see how today plays out. I might pull off some catapult. Putting on catapults, taking off catapults, dogs and cats living together. Look at this. The S&Ps are still headed to the upside. As Apple, okay, all of a sudden becomes like, we need to buy Apple. You know that crap is bad when they're rotating back into Apple, because if you haven't looked at it on a year-to-date basis, thing was down 10%, 10%, now only down 4% in 2 days. So there's a huge bid back under Apple. Now, with that being said, take a look at Apple's order flow. Okay. Oh, I guarantee they're in here. Look at this. They're just buying calls like a mad little monkey. So, question, okay, will be for this trading session. Then I'm going to go into some really tactical stuff over here. But the question is for this trading session, does the Apple rally just fade out? We keep seeing this in the mornings where they'll attempt to actually bid a stock, and they do by buying a ton of calls. I know that people look at this and they go, they're buying Apple today. Oh, hell no. They're buying calls in Apple and driving Apple stock higher. No question about that, right? Unequivocally, but it's definitely call buying. There's 185,000 calls that have traded. That, okay, is just indicative of they're just hitting that marketplace and buy them. Okay. This is some wild stuff, but we've seen categorically speaking, day in and day out, even in NVIDIA, where it dies out. Like if you look at NVIDIA earlier in the week, it rallies and then just completely dies out. And some of them have actually faded back. So I am not going to jump into a short position here in Apple. I don't think that that's permissible just yet. But the point being, like, that's NVIDIA yesterday. That thing actually sustained and continues to sustain a bid. Actually, let me come back to 1 day, 1 minute. I apologize. I want to show you. Earlier this week, I was watching some of the trade activity in here. But what kept happening in NVIDIA earlier in the week, there you go. There's a huge bid and it flatlined. Okay. This one sold into, no attempt to recovery. It was just, again, NVIDIA's actually had a very rough week. I assume that what's going to happen in Apple here is it's going to flatten out, maybe even roll over. Problem is, I don't want to step in on the wrong side of this one. And I'll tell you why. Apple is not just on a rip over here. You're so far outside the deviation. This thing could definitely pull back right towards the upper edge of that expected move. But I think it's a rough trade. It's a very rough trade. So here comes the roll in the marketplace. That is, we're looking at just maybe a little bit of sell side activity that's going to start to bleed through. Again, volatility still sitting near highs of the session. Moreover, advanced decline line, don't think that that's improvement. Okay, that's a couple of stocks like Google that are sitting at the flat line, right? There's crap like Walmart just trickling, higher, but nothing. There's not like real engagement at the buy side of this at all. So also notable, okay, we do have the crappy consumer sentiment indicator coming out. Ladies and gentlemen, University of Michigan. Yeah, we have that coming out. I'll create an alarm just so we don't forget, but we have that coming out 7 a.m. Pacific time. Okay. I set the alarm 1 minute before. That is the consumer sentiment. Consumer sentiment could absolutely today rock this marketplace. So just be aware of that. Okay. With that. See, Judd was saying bought a call spread based on Gianni's call for Apple to rally. See, I appreciate that what you did is buy a call spread and not just an outright call. That's smart. Okay. It's really, really smart. So that's what you want to do instead of like, a lot of people go out there and just, I want unlimited gains. Because if you're going to be wrong, okay. And the other thing is, as Apple starts to rally, which it clearly is right now, as Apple starts to rally, the volatility will start to crush in here. Take a quick glance. Now you see volatility going higher. Okay, and this volatility though is indicative because of that earnings. This is 30-day vol. That short-term vol, though, could absolutely, this short-term vol will start to get decimated as Apple goes higher. Apple is not like an NVIDIA. And believe me, I love taking a contrarian position, but this is one of the most linear moves that you'll ever see in a marketplace. Again, I have no illusions whatsoever about these S&Ps. We're sitting right now at 52.11. By the way, once again, the 11 handle seems to carry tremendous weight inside of the S&Ps. Look where we are right now. I'm going to put my mouse on that 52.11. Huge amount of trade in the last few weeks. And again, mind you have to go all the way back to a month ago to see all the activity in here. This is a 30-day, 1 hour. I do absolutely have some assumptions about this marketplace. Number one, okay, bonds are attempting to actually break higher. Bonds are breaking higher. That is an extremely defensive posture, okay, at this point. Bonds are not what they were yesterday or the day before. This, okay, unfortunately, as I was saying, this is geopolitical tape. This is unequivocally a geopolitical tape. And what I mean by that is you need only look down. The volatility may be overreacting, okay, to the geopolitical risk in the Middle East. Maybe it's overreacting. It doesn't matter, okay? The vol is your first indication, okay, that markets, they're scared a little bit here. This is a big move. The 12% move on a percentage basis is nothing, but it's a big move off of what yesterday was a volatility crush. It's also a considerable move coming into a weekend, but that's what geopolitical risk does. Geopolitical risk makes people think twice about, crap, the market's closed for 2 days. This is a time we can't mitigate risk. Think about that in perspective. Every other day throughout the course of the week, even in the middle of the night, something happens and they snap that risk off in a second. But your trading firm, you got to make some rough decisions over here. I think buying volatility is a damn good one. Moreover, there's a little bit of a bid to bonds, okay? Bonds, well, this week, bonds have been decimated this week. Take a look at auto expected moves, okay? The bonds got absolutely crushed. They're back inside all of a sudden their expected move. And you got to realize when I say the bonds have been crushed, holy crap, last week, huge moves, okay? 2 weeks ago, or 3 weeks ago, huge moves. We crack outside yesterday, we pull back inside the expected move. The reason I'm mentioning this and I'm using TLT is the bond trade, it's not even what it was yesterday. Yesterday it was interest rates are going to explode. Now they're using bonds for duck and cover. Okay, they're basically buying bonds just in case the proverbial beep hits the fan. Now, how do you know that this is a geopolitical or what? Traders will actually call this a war tape. The movement into the dollar is pretty indicative as well. Okay, the movement into the dollar is actually scary. There is a very simple idea that's out there and has been out there for decades, and that is money often knows, okay, before you do. Money often knows before you do, and that is huge money moving. There's a lot of capital moving right now towards the US dollar, and the US dollar, look at the bid overnight, okay? At some point overnight, people realized, well, damn, the dollar's full, so they started buying bonds as well. And then the volatility opened and they started buying it. By the way, the volatility right now is obscure. It's really high because if you look at the vol futures, they're at highs right now. But those S&Ps are nowhere near the lows. You guys got, you got 15 handles to the lows. Those two, in my mind, they don't jive together. So something has to happen here. One of two things has to happen, like right now. Okay, what has to happen? This market's got to come down, okay? Or the volatility has to drop. And I don't see any, in between over here. Do you? Okay. And I don't like to get, he's all bared up with no place to go. No, I said, look, the volatility is amping right now. So markets have to go down. They got to go down because somebody got to pay for this. Somebody's got to pay for your volatility going higher. And the way to actually, as vol goes higher, as a derivatives trader, you buy vol and sell S&Ps and buy vol and sell more S&Ps, okay? So if you don't sell S&Ps and S&Ps don't sell off, then they got to sell some vol, okay? And then buy S&Ps. So there's no in between over here. speaking of no in between, a little bit of a hit to the financials in the last couple of moments. And again, I'm not usually so inclined to mention like almost every tick of trade in the morning, but this is cool stuff. Like this is the kind of tape you'll learn more in a day like this. Intraday, you can learn more in one day looking at a tape like this than you can learn in weeks of watching a crappy bullish tape. It's a thing that people that predominantly just succeed in bullish markets are absolutely crap traders, because success in a bull market is I bought it and I hold it. Okay. What do you do when we go down? I hold it and I hope. And go, what do you do when we go down big? They go, I get screwed. They go, oh, okay. But I mean, like on an intraday basis, you think like to yourself, well, I don't trade intraday. And some of you don't trade intraday. But on an intraday basis, even this tape, just looking at it, this makes you better in every way, shape, or form. Okay. It makes you better because you're seeing this kind of progression play out in kind of real time where we're already anticipatory of the moves, right? Even though they necessarily haven't played out. And you don't feel like you can typically do that. Oh, this is getting a little sketchy now. As I said, go up, might flatten out. I literally drew that on the screen. The question is, do they roll them? Okay. Roll those chickens over. Yeah, I don't like you, Google. Okay. Google beat me up yesterday. That was one bad trade this week. I'm looking for something on an intraday basis. Not finding it, but I'm looking. Doesn't preclude me from looking. Anyway, here we are at 52.11. You know, I showed up to see a big trading session. What have I got? Got a slop fest ahead of me. The volume is actually light and fluffy at this point. Light and fluffy volume with a side order of nothing going on. Meanwhile, oil is has gone parabolic. Oil once again is up $2. The big move. It's a really big move. Don't worry, people. Don't worry. We'll still cut interest rates. Um, it drives me insane that they keep saying this. Okay, that don't worry, we'll still cut interest rates. Okay, it really is. Anytime they're starting to talk about, by the way, that University of Michigan numbers coming out, that's why the volume is dropping. Be careful over here. University of Michigan. Okay. Anyway, University of Michigan sentiment indicator is coming out, and that actually is 40 seconds away. It's one of the reasons the volume has actually dropped, which you can't even imagine. Okay, there's a ridiculous survey out, and I mention this almost every single time this University of Michigan sentiment survey comes out. There's a ridiculous survey. It's a survey. It's not like skin in the game. It's a bunch of people, like a bunch of college kids that are calling people up, going, "What do you think of the economy?" Go, I don't even know. I don't even know. Okay. I live in Michigan. I have no idea what's going on. Okay. Because if you did, you get the hell out of there. I'm just kidding. Like Ann Arbor is really nice. Okay. Some friends that live in Traverse City too. It's really nice. Just don't make me have to go. There it is. Don't make me have to go to Michigan. Oh, please don't make me have to go. For those of you that don't know this, my in-laws are there. So not a fan. Not a fan. But Gianni actually lives not too far from my in-laws. I'm sorry, Gianni. I'm not going to come visit you either. Has nothing to do with you. Okay. It's them. It's definitely them. Okay. Actually, I want to go up to, I have not done like the Mackinac Island kind of crap. I, did I say crap? I haven't done that. I'm not the one for the tourist crap. Okay. So I can go like ride a little bike on an island and eat some damn chocolate. That sounds like a plan. Okay. I live on a damn island most of the time and I'm ready to get back there. So nice big move here on this one. Have I offended anybody yet? Because man, I am trying this morning. Like I usually don't try this hard, but trying today. Okay. 80 lines dropping again. I'm just looking around the list, some of the usual suspects over here. A survey from a bunch of monkeys from the University of Michigan is moving all of financial markets. That makes me feel warm and fuzzy in the morning. Anyway, onward. Honeymoon. Okay, let me tell you, way past the honeymoon. All right, way past the honeymoon. So yeah, continuing on over here. Um, Oklahoma. Are you actually indicating that I should go like visit Oklahoma, vacation in Oklahoma? There's a place that not a lot of people are going to vacation in. I actually think I have been there. I don't know where the hell I've been. I've been in a lot of states. Okay, there's only a few that I haven't actually been to. I've never been to Montana. I have not. I'd like to go to Montana, North Dakota. I hear it's lovely in February in North Dakota. Uh, I've spent far too much time probably in Wisconsin. That's just a whole state that kills brain cells. It's good for you. It's good for you. If you had to describe Wisconsin in a nutshell, driving around in a snowmobile at 1 o'clock in the morning and still going to bars and zipping across a frozen lake. That's all I really remember from Wisconsin. That was my whole trip. Okay. Oh, and people at the bars still had rifles on their shoulders. I'm like, should they be drinking with those rifles? They're like, what do you want them to do? That was the exact response. Should they be drinking with the rifle over the shoulder at the bar? They're like, well, they're going to go hunting in a few hours. What the hell else are they supposed to do with their rifle? And I'm like, all right, I'm not asking any more questions. Okay. S&Ps are going to break down here a little bit more. And you can hear a little definitive in my voice because the volatility is rocking. This is exactly what we were looking for earlier. So I'm actually surprised the S&Ps are holding up as well as they presently are. Okay. That's right. Actually, we have really good friends that live in Montana part of the year, and they live on the island. They go between the island and Montana. So I got a place to stay up there too. That's a place I should go visit. Hmm. Anyway, if you've been to Wisconsin, you know exactly what I'm talking about. Okay. Oh, did I mention the part that it was like 20 below outside? That's it's not a good temperature for me. Actually, I don't really mind the cold. At least then I didn't. Apple's starting to roll over a little bit, but that's not going to be enough. I want to look at this briefly because what I'm doing right now is I'm kind of holding and hanging out over here. Um, there's still a lot of call buying going on in Apple. There's still a lot of call buying going on. It's huge activity. I mean, look at this crap. This thing's already traded a million contracts. 35 minutes into a trading session, it's already traded a million contracts. It's getting it on, right? Take a look at spiders for a second. Spiders are only doing 1 point, like almost four. SPX probably good for what, 300,000? Okay. Oh, 400,000. Ooh, look at the big volume in the SPX. What else is actually trading today? All right. On a daily basis, all we're doing now is we're just massive concentration of liquidity into a handful of products. This is big size inside of NVIDIA too. NVIDIA, there's definitely some call selling going on, but there's just a hint of put buying. This one might be worth watching. So what I'm actually doing right now is I'm trying to handicap what I want to do in terms of in-out spreads. Okay, I'm looking and shopping for in-out spreads. Part of me wants to actually get a little bit bearish inside of TLT on this bid. I've seen the bond market obviously slipping. Look for the bid and look for it to drop again is kind of what I'm thinking. Now, I'm not a big pattern kind of guy out there, but I hate this new TNX sign. Anyway, I'm not a big like pattern kind of guy, but in my head, I am thinking that these rates are going to pick back up at least 4.7, 4.8%. Okay. Now, the threat of geopolitical risk is prevalent today. That even if geopolitical risk starts to hit this marketplace, I mean war risk, I'm not sure we're going to continue to rock into the bonds. The U.S. right now has got some pretty serious inflation issues. It doesn't matter what you think. There's inflationary issues right now, and I know that the Fed is discussing. By the way, I was talking about the Fed being political or not political. Um, don't for a second misinterpret what I was saying about the Fed. I personally, cracked the lip over here. I personally do not believe that Jerome Powell is a political individual. On the contrary, okay, all the monkeys under Jerome Powell, you can already feel them vying to be the next head of the Fed. They're just basically, hey, don't worry about it. We'll cut when we need to cut. Okay. They're already trying to put the market at ease, which is not helping at all. One thing that I am a firm believer, and I was saying this earlier in the week, and I'm going to reiterate it again right now. Okay. Inflation, okay, to slay that dragon, you have to come in with just unrelenting rhetoric that just basically says we're going to hold them steady, interest rates steady, or we're going to raise them, okay, until we break the back of inflation. And if you even comment about, don't worry, there will be a soft landing, you're already dead, okay? The absolute worst mistakes that I have seen, and it doesn't matter whether I think the Fed made mistakes or not, okay, but the worst mistake I think that anybody has made economically at this point has been they're talking about, all right, lowering rates already, which is devastatingly stupid before you actually see inflation die. You got to keep the pressure on. You got to keep a full court press and keep traders staved off, because the second the traders think you're going to lower rates, inflation's right back. And they have done a terrible job, in my opinion, of managing that. Now, it doesn't matter what I think, it's what you see in the marketplace. There's one other aspect, though, that goes with this. Okay. The other aspect that goes with this is I am a firm believer, and it's one of the reasons that I have been rather bearish. Look at the bonds breaking out. This is real defensive trade going on here. Okay. I am a firm believer in that. By the way, I know I have a little alert set in here. I'll get into that in a moment. I'm a firm believer. Okay. Asset prices help dictate inflationary pressures. Okay. I don't give a damn what, CPI is. I really don't. I mean, CPI, I know it's a catalyst. Boom, they throw it into the marketplace. Okay. I got it. Okay. I am absolutely, though, a firm believer. Asset prices, okay, are every bit as important. Asset prices being the S&Ps, every bit as important as going to the grocery store and looking at your $20 freaking thing of milk. I mean, if asset prices don't come down, how have you beaten inflation? You haven't. People feel like they have money. Guess what? You still have inflation. Okay. And I don't really, care. Any economists want to, write me an email on that one. Okay. Because you're never going to convince me there's not times where asset prices are going higher and you kill inflation. You can look back historically speaking. And of course, you'll mention, well, there's this one and that one. And there was kind of a soft landing at one point over here. Bottom line, asset prices, if they come down, then you got disinflation. Okay. I got disinflationary. Okay. I think you have to kill asset prices. You don't kill asset prices, you're not going to kill inflation. You don't kill inflation, you got to keep rates high. And we're at the point right now, if you haven't figured this out, by looking at the TNX, okay, and how many trillions of dollars of debt have to be rolled over this year. Okay, this is going to be a record year for rolling debt over. What that means is the Treasury themselves, the Yellenator, Janet Yellen, has to roll debt. They're going to be rolling debt in some of the highest rates that have been seen in what? Well, let's go back historically speaking, because they finally fixed this piece of crap over here. You're going to be rolling debt in the basically the highest interest rates right now that we've seen in about 20, anywhere from like 18 to 20 years. You're going to be rolling in that environment. How do you like that? Okay, yeah, it sounds pretty exciting. Oh, by the way, the debt is, what, 8 times larger than it was back here. Okay, it's probably more than that now. I have to sit there and figure that crap out. We're only at like 4 or 5 trillion over here. The debt really took off like in this neighborhood after the financial crisis, got up to like 10 trillion, but what's 30 trillion amongst friends? Anyway, they're going to be rolling record amounts of debt in here, which at some point you're not going to be able, they're going to realize like, okay, they have to get the interest rates down. They have to. I think the only way to get interest rates down, somebody needs to step up and actually do the right thing. I know there's politics involved. The only right thing to do, you got to take asset prices down. And at some point, people are going to start coming to this conclusion where, damn, it's a good point. Okay. How do they take asset prices down? Well, you can start actually buying bonds and selling S&Ps. That's a start. Okay. But we're in a very, very difficult crossroads in this marketplace. And it's something that, okay, I'm not wrong. I might just be a lot early in this one. But the rolling of the debt has been, yeah. By the way, if there's one critical, you want to be critical of somebody, Janet Yellen has done a piss poor job of rolling debt. Piss poor. It probably cost the U.S. another few hundred billion last year. They've done a terrible job rolling the debt forward. Like, literally, okay, you put a monkey in the seat and they could have just been like, throw stuff at it and be like, wouldn't have mattered because wherever she went in the yield curve, it's like the worst place to roll debt. I like being critical of like Janet Yellen in that, but again, nobody looks at that stuff. Yeah, don't worry, it only cost you a couple hundred billion. Longer term, though, can cost a few trillion because that's just going to amplify. They rolled debt in the funkiest way. They rolled debt thinking that rates were immediately going to come back down. Okay. Guess what? They didn't. Okay. They didn't. Um, anyway, onward over there. Okay. Oh no, here we go again. People are starting to talk about don't talk about the student loan thing. There's one thing that'll piss me off. It's a student loan thing. Here we go. Okay. I'm not, that's the only thing I get crazy about is a student loan thing. Climbing up in freaking attics, paying for college. Okay. You get it for free. That pisses me off to no end. I don't care if it was like 30 something years ago. It still pisses me off to no end. Have you been in an attic in Phoenix in the summer? Okay. They only could find, a 19-year-old idiot to do that. That was me. Okay. For those of you who don't know the story, I used to pull wire through attics in the summer to pay for college. So I didn't want to take loans, and I figured out a way to make a ton of money in the summer. I made as much money. I actually made more money than my buddy that was an Alaskan fisherman. He actually went up to Alaska. He's like, "You want to do this?" I'm like, "Oh hell no!" I was thinking about it though. Okay, I was like, I could go up there. I was like, no, I thought for like maybe 1 second. Okay. No. Okay. No, that's not for me. Okay. But instead I pulled wire through attics in Phoenix in the summer. It was the only job. You can make almost 30 grand. And this is going back like 30 years. You know how much $30,000 is more than people were making a year. And we made it in less than 3 months in the summer. I say we, and two helper monkeys, which I'm still pretty close to. Anyway, it paid for college for almost 2 years. I did it though for a couple of years in a row. It's good stuff. Um, anyway, onward and upward over here. Back to the fact that rates are actually coming down today is a plausible thing, but I'm shopping in out spreads and I'm frustrated in shopping them because I'm looking at stuff like Netflix, but there's earnings, right? So it's not going to happen. I look at stuff like the XLE. I'm not taking the other side of that. Again, I'm shopping everywhere and anywhere. Okay. Meta. I would love to get bearish in Meta. You can't. There's earnings. I do look at NVIDIA. NVIDIA has earnings. Okay. But if I get bearish in NVIDIA, I want you to see something interesting in here. So look at the earnings period in NVIDIA. NVIDIA is all the way to May 22nd. I know I don't like to screw with earnings. Okay. So I could come out to like May 17th. That gives me 35 days. But look at the costs for in out spreads. One strike in the money, one strike out of the money. It's 260 for a $5 wide spread. What's crazy about that is because there is an inverted implied volatility skew. So forget about delta for a second. Look at the implied vol in here. The implied vol is like I'm buying a 43.7, but then I'm selling like a 43.6. Like you see how they're basically close, but look at another product. When I say look at another product, like look at something like the QQQ. Okay. In the Qs, look, the skew is actually favorable. So I could do like a 45 here, 40. I got to tell you, I might do an in-out spread in the Qs. I know they're down $5 today, but I may actually employ this strategy in the Qs. That would actually circumnavigate it, but it's a great way to trade it. See if I can actually fill this little monkey. I hate getting bearish and then bearish. All right, I'm filled. Yeah, this actually is, I'm going to create a duplicate order. Let's see if I can actually hit this thing at 81. Moving around a lot today, though. Creating a duplicate order. I'm going to copy this. I'll paste it down below. I'll explain in a minute. In, out, spread. It's an opening trade. It's bearish and outspread. I'm working 81 cents. I'm actually going to fire another one at 81 cents. I'm screwing around with the price. I filled at 82. You guys are welcome to fill at 82. I think 82 is very, very viable. Okay. Anyway, we're actually looking at doing it. So I hate, okay, I hate getting bearish on the day, but I got to tell you, so you got some sell side activity in here. Nvidia, okay, and really funky. Looks like it's going to roll right back over. The reason I wanted to get bearish in Nvidia, okay, and I want to make this very clear of what I'm doing because it's kind of a funky trade. I'm going to record in-out spread updates today. So I just filled again, bought another one in the queues, bought another one in the queues, okay. I'll wait a little bit. So we should fill at 81 cents. Anyway, what I want to do in here is this. I am trading Nvidia through QQQ. You're like, what the hell are you doing? There's sell side activity, bid back, drop. Okay. The drop in the NVIDIA, the drop in NVIDIA is going to pull the rest of the market with it. It doesn't matter what you think. And I can't trade like a Microsoft because it's just too, I mean, can't really trade an Apple right now because the earnings are too close. But I think NVIDIA, because it doesn't have earnings, really is going to take center stage. And the bid back in here, look, okay, I don't know if it's going to last, but I kind of feel a little warm and fuzzy about this one. We'll see how it plays, though. Like, this is a spread that has 28 days to live. Okay, and you're like, it's not out of the money. Look, this thing is going to move all over the place today. Just calm down. All you need is one good down day in the marketplace, and you'll be home on this one. So let's see how this one actually plays out. So that spread's going to move around a lot in price, though. It's going to be very, very volatile. And again, it has a lot, though, in my mind, to do with the bid back under NVIDIA. If you take a look at this from an auto expected move point of view, okay, it's perfect in here. Lower edge, lower edge, lower edge, bid back, lower edge, you know, kind of thing. The bid back, though, I think it's faded. So we'll see what actually transpires in here. But there's times where I want to trade a product and the product just doesn't price well. The Qs sure as hell do. And I think that the implications are that it's going to hurt the Qs. Taking a look at Qs, I also want to look at like XLK looks exactly like the Qs, right? Which is technology. Interestingly enough, the XLK, take a quick look at year to date, it's up about 10%. Okay, the QQQ up about 9%, right? S&Ps just look around about 8%. But the S&Ps at this point are definitely fading, and it looks like the financials are really starting to have impact on that. Speaking of having a broader impact, I haven't talked all about individual stocks today. JP Morgan is out with earnings. Okay, their costs have risen, yada, yada, yada. Net interest is actually a problem there, yada, yada, yada. The only thing interesting in JP Morgan, and I mean the only thing interesting, okay, is it smashed through the expected move. I think its expected move is about $5-6. Yeah, it is. So this is interesting because JP Morgan's a big monkey. Look at that. Had a $6 and about 75-cent expected move. Right now is moving about $8 and change. So it's about a deviation and a half in here. Now, look, the day is not over, but this is one that's already broken through the expected move. And frankly, I'll give this one to it. It opened very close to the expected move, then broke down. Here's one, though, that we can see continued sell side activity on. That's a stock worth watching throughout the course of the day. The next one on the docket is going to be Citi. Citi had earnings today. It has not had its conference call though yet, but it's so interesting because this one, okay, completely unchanged. Huge bid under it, completely faded, totally unchanged. Last but not least, Wells Fargo. Wells Fargo had a big bid under it, okay, faded as well. It's basically unchanged. It's pretty funky though that we're, by the way, speaking of which, Wells Fargo is in their conference call right now. This is something you just don't trade. You don't trade when there's a conference call going on. You definitely don't trade Citi when there's a conference call pending in here because that's going to be a big market mover. Nevertheless, losing the voice over here. Nevertheless, financials are taking hits across the board. The net interest really rolled Goldman Sachs over. Goldman Sachs is actually coming out on, I think that's Monday. Is it Monday before the bell? Okay, it is Monday before the bell. So we're getting some news before the bell. And take a quick glance. This thing is way outside its expected move for the day. So interesting stuff. I was mentioning Intel earlier this week, just to kind of reiterate, Intel getting decimated day in and day out, just annihilated. And there's, to me, one of the more interesting things about Intel. Intel has news today. The news is China don't want them no more. The Chinese government is going to be banning chips. So Intel and AMD. AMD was also taking a little bit of a hit this morning. It's down nominally, but Intel, to me, is interesting because totally missed, but Intel stated earlier this week they're coming out, okay, with chips that are going to compete with NVIDIA. It's not going to take that long, and the chips use half the power and are significantly, okay, and extensively faster. Okay, very surprised, very surprised on this one that the stock doesn't have a bid under it. Because if you're sitting here and you're contemplating, is there a bubble and so forth? Look, companies just came out. Several of them just said, we're going to compete with NVIDIA. We're going to have our own chips. Okay. Google is actually making their own chips. It doesn't seem to actually be impeding upon NVIDIA's progress right now. Anyway, well worth watching this stock in the near term. So the only trade I've really done now is that in-out spread. Let me go ahead and just make sure that this gets texted out. So we're going to be buying the 441s, selling the 439s, buying the 441, selling the 439s. We're actually doing this for the expiration of, okay, is it not showing on here? God, you know, I hate this crap. Okay, the May 10th. Yeah, May 10th. 82-cent debit. And let's copy this one and paste it down below. There we go. I'm also going to make sure as we send this out, I'm going to create a duplicate order. I should actually be able to grab this for even less than that. Make sure I'm going to put one in at 79 cents as well. Okay, work it. So I am now working at even 79 cents. So 82 cents is an easy fill. Okay. Good stuff. All right, so I do have to turn it over to Jeff Bierman in about 5 minutes. I wanted to get more done today. More done. I am also looking at Boeing. Look, I have a couple of different positions on Boeing. Namely, I have just so everybody's aware, I have a catapult on Boeing. Okay, it's up, but we're not home yet. It's too early, like 70 days left in here. It's up, but again, I also have a 3-lot of naked short puts against it. So net, I'm not up enough. I need to let a little bit more decay come out of this trade. If I'm nervous inside of Boeing, okay, I don't close the position. I could actually roll the position off, but we'll see if Boeing actually goes down a little bit more before I start getting, let's not get crazy just yet, okay? Moreover, that's one of the other positions I was looking at. I've got a Tesla position that's kind of working in here. Taking a quick glance, look at your inventory right now because short calls, the market's falling, but these calls are not necessarily making a lot of money yet. And the reason they're not making a lot of money, okay, I want you to think about this. The market is going down, but as the market's going down, the volatility is coming up. So what's happening is your calls are not producing any positive value for you just yet. don't worry. The first time we flatten out or even have a mild rally, they'll crush the living hell out of the volatility. We're in a very precarious place though right here. The volatility is going parabolic at this point. On an intraday basis, there's been nothing but volatility buyers all morning long, all morning long. When I say it's going parabolic, that is parabolic. A little bit of a dip, but it looks like it's going to rip right back up. So just be aware, you could get a pretty serious move on the trading session. There's a few things that are unusual today. First of all, the University of Michigan sentiment indicator sparked more sell side. It was just the catalyst. It had nothing to do, like nobody gives a damn about the University of Michigan sentiment indicator. It's just, again, another spark in that marketplace. The unusual thing about the market right now, it's pretty good sell side activity. There's no volume. It's dead. It's dead freaking slow. That's not a good sign. You do not want to see a market, okay? You don't want to see a market that's down almost 1% with no volume, because no one, okay, they've already hedged at these levels. This is a well-tracked level. Look back on the week, okay? Well, we've been here. We spent a lot of time down here earlier in the week, okay? Why is it not good? Because this is well-charted territory, well-charted territory. And what that leads me to believe, okay, and this is my justification for the remainder of the day, you're going to continue to slip until we hit some new territory, and then we're going to punch it. You got to be careful today. The volume could start to surge and really drive the marketplace down, and everything is primed for it. You got bonds up a full point. You got VIX. I mean, you wouldn't be surprised if you saw VIX at 20 later today, right? People go, no way. You shouldn't be surprised if you saw VIX even at 20. VIX is ripping right now. And I can tell you, just based on what I'm seeing in there is size trading, huge size. Okay. This is not a quiet day in VIX. They are rocking in VIX, right? Look at the call sizzle in here. That's, look, I don't even know if it's accurate, but I can tell you 400,000 contracts an hour into the trading session, you're at a record pace of volatility contracts, which tells me the VVIX, look at that. Okay. It's through the roof. It's the highest level of VVIX that we've seen since serious selling occurred. There was serious selling on October 27th. There was serious selling back here. You don't even have to, I mean, you can look, you don't have to. Okay. I ain't going to miss something like that. But you talk about like late October, look how serious some of the sell side was at the point where VVIX was that high. Okay. We look like right now we're going to punch through lows, the overnight lows, and kind of go for it. And the volume is really going to pick up. As the volume picks up, there's likely more bond buyers still out there. The dollar, we're still basically at highs of the trading session. Okay. I did not take a position inside of Apple. I think of timing this one's impossible. Intraday trade's a little bit rougher today. NVIDIA is on the dance floor. On the dance floor to what? Some pressure. Okay. And could be some serious pressure into NVIDIA. And why am I picking on NVIDIA? Contract size in here is obscure. There's definitely some put buying going on. Okay. But I would look for its bid back from yesterday to get faded. There's just not a lot of places to sell. Like Microsoft on a percentage basis is already leading the market lower, right? When you start looking around a little bit though, there's not a lot of products. Okay. There's just not a lot of products that I want to jump in and sell. I mean, Apple, yeah, sure, but it needs a bid back. No question, Amazon's pretty much in line with markets today. Google, I'd love to see Google get smashed. This, again, could be opportunistic as the day goes on, some sell side activity in here. Even the energy sector, though, has come off highs today. So, mind you, on a broader picture here, this is where we are. This is where we started the week. Okay. Right there is where we started the week. This is where we're presently trading. Okay. Now, with that being said, lower edge of the expected move. Look, that's more than a hop, skip, and a jump away. It's 51, okay, 15. Where are we right now? 51, 55. Big move. It's 40 handles lower. 40 handles lower, though, plausible. You damn well better believe it. Okay. Stay tuned on that front. So be careful. There's a lot. It's not just sell side activity. There looks like a lot being held back today. There's positive ticks. I don't even care. Okay. There looks just like not enough volume right now for the kind of volatility that we're seeing in here. No one seems like they've committed to selling at this point. And that commitment may be only a few S&P points away. With that, stay tuned. I'm going to bring on Jeff Bierman right now. And as always, I reserve the right to come on at any point during the day. I'm not leaving the office here until about 1:30. I got meetings and crap all day today here, my office. So I'm not going anywhere today. I'm in my best pair of pajamas for today. So I'm here all day, baby. We'll see. I reserve the right to pop in here though at any time when somebody else is on. So, and if I do, yeah, so be it. Pick on Brandon maybe. Look, it's going to be a long trading session. Stay tuned. Thanks everybody for tuning in to the first hour of TheoTRADE.